So in last we have video we have completed related to IPO and direct listing. So IPO means initial public offer, whereas you don't want to give your shares to public, you will go for the direct listing. It was discussed in last class. In direct listing we have in the companies where they want to get in listed in the stock exchange, they will not give any they do not to participate in any IPO process. They do not incur additional capital cost, or they don't want any additional capital. They will simply directly listing in their company in the stock exchange. So the advantages what we have discussed in direct listing can avoid related IPO related expenses, they can avoid, so which we will need to pay the investment banker, merchant banker, underwriter, and all the benefits of listing will come for the company. So anyway, IPO or direct listing, any company will get the benefits of listing after the once company is listed, and brand image will be get, and many people will know about the company, and in stock exchange and news channels and papers, research analysts will also follow the stock and provide recommendations. And old investors will have liquidity to sell their shares in the stock exchange, and they when they need money. And real estate investment trust, that is REIT. In this case, the sponsors sell the units of real estate trust to public in IPO. They may get the in the form of shares, they will sell the units. And whereas invite infrastructure investment trust, in this case telecom companies like Airtel, they can sell their infra assets like telecom towers will be there to public. And companies like bonds, navy bonds is their investment trust infrastructure, they will give this form in the units of shares. And after that company is listed in the market, they may go for IPO or direct listing, whatever though. If go for IPO, what they need, they need capital, they went for IPO, and after the getting our capital or after the listing in the stock exchange, main objective is generate profit over and over the years and meet the expectation of investors. To increase the share price is the main important. So company also concentrate on corporate actions. What is the corporate action? Corporate actions may be declaration of dividend, bonus issue, and which will influence the investors in the market or generate positive image of the investors cycle. Here what are the investors expectations is there. To meet that expectations, investors expectation, company will use the corporate action. So what are they expect a company from company? Investors will expect the dividend from the companies, and financial position and cash flow in the company. If these corporate actions will be decided based on, if the company has more cash, no need to keep all this cash for expansion, and they can pay to investors as dividend. If the company has more cash and they don't want to invest a full amount in the investment, and they ideally putting in that money in the company's bank account, they will share that amount to investors. And if the cash is required in the business, they can announce the bonus issue. If full amount is required, they may go for a bonus issue at that point of time. And for this bonus issue, they do not want any cash to be distributed. And for the creation of liquidity in the market by reducing the share price, they will go for this corporate action. And to expand the business into the new location or geography or new business lines, they will go for corporate actions. If you see that Walmart company, which is already successful company in the America, they come in India and they will purchase that Flipkart. If they start one the same name, and Indian buyers or sellers, they don't know the about the Walmart, so they entered with Flipkart. which already known by the Indian industry buyers, and so it is easy to expand the business. This is called as acquisitions. Another corporate actions may be used as by company will be mergers, and it will create the positive image impression to on the company and increase the brand image also. And if there is any negative news or the company in the media, they may rename that company in that better image, and after that year they may other reasons for company may have other reasons also for corporate actions. Here we are discussing about corporate actions. Corporate actions, what is the corporate action meaning, you need to know. But if a company use this corporate action in a right time, then it will can create the wealth to investors in the long term by using these corporate actions. When wealth is created to their investors, the company's image will be positive image will be created in the market. So for that the company is required more research analysts or intermediates in the market, and also the recommend the investors will recommend to other persons. So our company is giving good returns, good actions, good bonus, good dividends, they will tell in a positive mindset, and persons will try to buy our shares, and our price bond share price will be increased because of demand is increasing. Here, what is mean by corporate action? Why company announce this type of corporate action means? Corporate action means it is an action taken by the company. Mainly, these listed companies will do this well, and that action will impact the stakeholder of the company. The stakeholders may be the shareholders or bondholders, etc. For example, if you have invested in some Infosys company shares, and if the company announce any bonus shares, you will get free shares from the company, and the number of shares will increase from some whatever number they are issuing. If they issue 1:2, if it has 1 lakh, and it will become 2 lakhs. The company issue whatever the ratio, if it is issued 1:2 for one shares, they will issue 2 shares, means 1 plus 2, 3 shares will be there, means 3 lakh shares will be at the after the bonus issue completion, post bonus. So most of these listed companies announce this type of corporate actions on regular basis. Why they announce these corporate actions in regular basis? Because the reason will be distribute the profits of the business to owners. So here who is the owner? Owners will be the stakeholders or the shareholders, and will maximize the wealth of investors who are invested in our company. That all persons are investors, so we need to maximize their wealth and discharge all the liabilities and obligations related to that security, like paying the interest on the bond and other reasons, like following regulations. So to follow the regulations, they will go for this. So these corporate actions will help the company maximize the wealth of investors, and this why corporate actions, how wealth of investors will increase if company is there, whatever the company is raised any money from the public, and it is listed in the stock exchange, that NSE, BSE. So they will keep some money price range at the starting. If you see that Tata Technology company, when it come into IPO, its the price range will be 475 to 500 they will kept. So for keeping that amount, they will observe the market price of the share in the market. If the market price is increased, that will create positive impact of the about the company, and all the stakeholders of the company can, like shareholders or customers, lenders, will need more. And here for that increasing the price, so the positive image of the company is main important, and that through there is no direct impact on the business operations of the company. The size price is increasing the market due to that share of company. For example, if you see the Tata Technology issued at 500 rupees and lot side will be 30 rupees. So 500 into 30 means it will receive 15,000. But after the company listing, its price goes to 1300. So from 1500 to 500 to 1300, that there is 700 rupees profit. That 700 rupees profit will not get by the company, it will get by the person who are invested in that IPO process, who have allotted the shares. That person will get the profit. But what here the company will get the positive image, so it will be trustworthy. Whenever next time it will come to IPO, that price will be there and persons will be there for purchasing the shares. Yeah, that is the case. And if the company can use these corporate actions effectively, then the decision can help the company to increase the wealth of the investor by increasing the share price in the market. So now they came for 475 to 500. If next time they will come for, they will announce 1,000 rupees also. Investors will be there. So if you see 1,300 means, then also persons will get the 300 rupees profit. So if the market price at the time of IPO, whatever the price will be there, and it will increase when the demand is there for that share. So if there is low demand, then the price will decrease. So if the company can issue bonus shares or stock splits, price may go down and level of, so more people will buy. When more people is buying in the market, the demand will increase. When the demand will increase, the share price will be increased. So if the company want to decrease in the share price is decreasing in the market, and that then the company can go for corporate actions like buyback of shares or stock share investors, that PE funds, mergers, acquisition, delisting, reconstruction, or reverse stock split. So when decreasing in market, the company share price is decreasing in market, then the company will choose the corporate actions like buyback or mergers or acquisitions, delisting or reconstruction or reverse stock splits. But when companies share price is increase over a period, any issue by the company, so they want to share price affordable in the market through corporate action. So price is going like anything, so then the company want to afford the prices, so then it will issue the corporate actions like bonus issue, stock split, right issue, or demerger. So this will help the company share price will put in the affordable price, so anyone can purchase it. So if the price is going certain period of time, certain point of time, only the HNI persons will able to buy. When retail investors is not able to buy, the sudden price will may decrease, then also retail investors not show the interest, so that the company maintain the affordable price to get more investors in the market. When the more investors are ready to buy, the company has more liquidity. When the company declare dividend to investors, when company will declare the dividend means it, when the company has surplus cash, so they want to pay to investors, then the company will issue dividend. Or when company, similar companies or competitors in the market paid bonus, so then the investors, our company investors also expecting that our company will pay. And one of the corporate action that is easy to announce and implement, so the investor can keep think about the company, and that may create positive impact. So in the market, all known corporate action means dividend. So when the company is paying that dividend, the main important here will be required. And for these corporate actions are more important. For the corporate actions, we need more research analysis. What are the research analysis to give recommendations on the stocks like buying and selling? So research analysis will understand the business of the company, and they will recommend their clients like mutual funds, investors to buy or sell the stocks. To understand the stocks or business, they will also go through the history of corporate actions announced by that company and how the stock price is moving in the market due to that. So, this research analyst, what can they do? They will recommend and they will understand the business of the company and then they will recommend. For understanding, they will see the company's past performance, whatever history they will see. So in the past, what the actions, corporate actions the company was taken, post corporate actions, what the company's position, they will see that, and after that, how the stock price was moving in the market. Due to that corporate action, they will see this in the broad way, the research analysis. If company like Tata company is announcing any corporate actions at regular interval, they likely quarterly or twice in the year. Basically, this service based companies may announce, but whereas manufacturing based company they will not announce the corporate actions regularly, because if you go for manufacturing side, they will put their money mostly in man cost of machinery items, so the huge capital will be required in that cases, whereas the service areas they will get money from general regular basis, and so in the company has any negative impression in the market due to any recent corporate actions, like they will announced FPO, that is follow on public offer or right issue, they, but issue is not subscribed. So some cases if the company is went for IPO, they are not subscribed. So in past, or if the company announced right shares will be issuing, but the company is not allotted the shares at the time of right installments. This will create the negative publicity of the stock, so investors may stay away from this stock for some times of that case. So research analysis will consider the what is the news they will get in the market, what are the actions was taken, what is the post implementations, what is the post position, they will understand. Then only they will recommend the company, recommend the their buyers, they recommend the investors. And if there may be bonus issue means if one company issue free shares to their existing shareholders, these are bonus shares. In this case, company converts existing profits or reserves in the share capital. So for example, if we go for the bonus issue, before capital they may have capital will be 1,000 and reserves will be 1,000, means capital and reserve will be 3,000 and number of shares will be 10. After that, they are issue a bonus shares, that is free shares to existing shares, 1:1. It will become 100 is capital plus 100 is the bonus, means totally 100 rupees. That reserves will go into the capital. Then price will be 20 rupees after the bonus issue. So results will be converted into capital. It will bonus issue. And can any company issue this bonus shares at any time? Means yes, the company can give at any time if the company has the free reserves or the accumulated profits in that company. If the company is making losses, they do not have the profits, then they do not issue this bonus issue. Why? The reason for issuing the bonus issue means to reduce the share price in the market, so more buyers will able to attracted to that stocks, so market cap or weight of the investors can increase it. So number of shares will increase. When the number of shares was increased, the shares will get reduced. So in the our example, capital was 100, reserve was 100 before issuing bonus issue. Of means that 100, that 1,000 means 100, 10 rupees will be the per share. After 200 will be the capital, 2,000 will be the capital, means 20 rupees will be the 20 will be the number of shares. Price will decrease. shares was increased, so more shares is there, supply is more, and they will try to create give the price at low price. When the price is low price, all will try to get into market, and the company will get the liquidity. And there is impact to retail investors and institutional investors like mutual funds, and they will edge you. If the number of shares will increase, the investors books those, so they have to update the quantity in their books. And number of shares, whatever the ratio they are given bonus as a bonus, the that much ratio was increased at that point of time. So here some dates will be required. What is the before X date and what is on X date, or after X date after 3 months? What is there? Before X date means before allowing or before going into that shares. Means in our case capital was 100,000, capital was 1000, reserve was 1000, and on X date the 2,000 will be the capital that all reserves were went to capital, and share price may decrease off year. So if for example market price is 100 rupees before X, it will become after X 50 rupees, and after the X data it will same, and after 3 months whatever the price will be there, it may go into high. And here the announcement date and record date may different, and payment are credited to demat account also different. In when I have buy any shares, so my name will be entered in the company's book. When the company is entering in the book, that date will be the record date. The purchase date may be different, and whatever the date will be there, the first day on which the shares are traded without or excluding the benefit of corporate actions like bonus shares is called ex-date. What is meant by ex-date? Ex-date means without issuing the bonus shares. Means before issuing the shares, means I am giving bonus shares announcing today. So after 1 month or after from 1st April or 1st January, it will be bonus will be issued. That's the case. So up to 31st will be the X date. In case record date means when I am recording that entry, that date will become X date is some I have given the date will be 1st January. Na, I will record that entry on 10th. If you go for 10th, I will record 9 will be the X date before the record date, and whatever the price will be there, we will see for that cases. And to know or calculate X date, we need to know some cases. What we what are the days taken by that stock exchange for clearing and settlement for trade or transaction data. So normally in India we have T plus one settlement was following by stock exchange currently. If you are purchased shares on Monday, these shares are credited on Tuesday, means T plus 1 day transaction plus 1 day. And here, so next day is also Tuesday. If record date will be Tuesday. If you buy on Monday, shares are created by Tuesday evening. The buyer name will reflect company's record on record data. So companies record the name on Tuesday. So then X date will be the Monday. Shares purchased on X date, Tuesday will be created on Demat account. On Wednesday, some cases, some missed deadlines will be dated. Different possibilities will be there for T plus one settlements. What are the face value was decreasing? What are the cases will be there? And if you go for the stock split and bonus issue, you need to see this different, that is stock split and bonus issue. Here stock split means decreasing the face value, it will become stock split. Means if we have 1,000, what you are doing, the 1,000 will be taking on. If we have 2,000 note, if you are taking the 2,000 note and you are giving for 500 notes, and where has bonus issue free shares from reserve. And how many times they can go for this stock split or bonus issue. For stock split we need limited, we need to go up to 1 rupee of face value, below that 1 rupee we will not go for stock split. Whereas bonus issue, unlimited time, if the company has profit they may go for bonus issue, no restriction on bonus issue. Any impact on earning per share due to stock split or bonus share, there may be impact on EPS. EPS means that is earning per share. Earning per share will be calculated based on profit after tax divided by number of shares. So PAT divided by number of outstanding shares. So EPS will go down since the number of shares are increased, because denominator is increasing, then EPS will go down. And where some cases we will go for a reverse stock split or consolidation of shares. This is opposition to stock split. Means here for 500 notes we will take and we will give the 2,000 rupees note. Here where the face value will increase, and if the stock price is low, company can combine or consolidate more shares into one, so price will increase. So when company stock price is low, then they will go for reverse stock split, and the small companies go for this option, not popular option like bonus or stock splits. And buyback. Buyback means in buyback of shares, company will buy the shares in the market from investors. They may not be a promoters, and company itself will purchase the shares. This is opposite to IPO or FPO or fresh issue of shares, because in IPO company going into public, but here from public we are purchasing. In this case, the company will sell their shares to public and raise the capital to use that money for expansion of the business. And here in buyback, company has more cash and they are using that cash to purchase the share from public, so number of shares of the company will go down. And why these companies will go for buyback means the main reason for buyback will be to increase the share price or to use the cash effectively in the market of shares is less than the expected price. So comparing with competitors, our price is going down and this company share price is low, so company can send messages to investors that the shares can be traded at better prices. Investors will sell their shares and company will purchase from the market, stock market. It is buyback options, and I think buyback will be go for up to 10%, they will be allowable for board, and after certain percentage they need to get the shareholders approval. And after that government can try to discourage the companies for buyback. They are, why the company will discourage for buyback means, here any government want more entrepreneurs in the country, so they want to see more companies and expansion, so that it will create more employment that can get more tax revenue to government. So government put additional taxes on company if they declare buyback or dividend, etc. So when the company is buyback, they shares, the government may put more taxes, additional taxes on that companies. There may also some criticism on buyback. So by buyback of shares, promoters increase their stake in the business through they are not investing any money to buy shares. So if the normal investors having less information about the company's growth plan may exit through buyback and the shares will disappear from the company records, so the stake of promoters will increase. So whoever the promoters will be there, the promoters will get more power, more shareholding in the company without they are incurring any money. Here company is going for buyback means whereas individual person is different and company is a different, company is a separate person. So company will take the decision, company is taking buybacking means the price will go from reserves and surplus, and the company once buy that shares and the promoters shares will increase. And if the company is paying any dividend. Dividend means that his money paid or distributed by the company to the shareholders after the profits made by that company. And the company should also consider the investor sentiment in the market and they need to expect the dividend since competitor company was paying. And if the company have a choice to pay a dividend to owners to business or reinvest, so company will have anyway company will have two options. So to can pay to as a dividend to in their shareholders or to reinvest that amount if it is not paying. However, company also see some of the investors have some impression paying company is more likely expecting from the market. So this dividend buyback stock with dividend means share price should go down since cash is paid out of the company, assets are reduced, and buyback means share price should go up since number of shares are less now. Where the stock split means go down since number of shares are increased, net asset will remain. And if you reverse stock split means go up. That is the case will be there in these corporate actions. These corporate actions mainly these companies will take to meet the investors' cases and criticisms we have discussed. Their case, some cases will be there. Criticism for buyback, dividends, market price reconciliation, market price impact. Here we seen that what is the market will impact when company goes for this corporate actions. So market impact means if issue for a if a company paid the dividend, the share price will go down, and if company went into buyback, share price will go up, and if the company go for stock split, it will go down because number of shares will be increased. Where bonus issue also means number of shares will increase, price will go down. So here dividend impact will not be visible in the market since the dividend amount can small and can around. So if you see companies will pay dividend 20 rupees, 30 rupees, 5 rupees only. But if you accumulate for all shares, it will be more amount and more people buy that stock, so price will increase and after exit price will go down to some extent. Here we need to reconciliation will be done by these fund houses. So these fund houses have to reconcile the data from finalizing the NAV and send to investors. Here the to send this NAV process includes many parties like custodians or fund administrators, fund houses and invest managers or prime brokers. They are can be different between data of these parties. So they will reconcile the data before finalizing the NAV, and they may regularly dependent or coordinate between the parties to manage the funds to report NAV. So there can be discrepancies in the data between two parties. All line items or important line items in the balance will be reconciled between the two parties to ensure they are correct. If the financials are not in a correct, though if the corporate actions they are taking, company will go into some problems, and after that company will choose these mergers and acquisitions. So why these mergers or acquisitions? So merger means two companies will enter into agreement to conduct their business in normal course. So here the agreement will be in friendly manner. Where acquisition, one company buys another company, and why these will go for mergers and acquisitions. So to increase their synergy benefits, to increase their synergy benefits, and like increase savings on salaries, rent, etc. due to less competition again from latest technology that their company is using, or cross sell the product to customers of the. In if you see in market, if you have only two companies, one company buy another company, then two buildings is not necessary, only one building is necessary. So one building will be leave and one building will be taken that cases, and change the brand image and entering the new product range. So if you go for the mergers and acquisition, here the brand image will be changing and we need to get enter into the new product range. Some cases it will save the tax also. So a profit making company may acquire some loss making company, and it will set off the profits, and after that they will pay. So it will save the tax also, and acquisition of new customers or start operations in new countries. New companies are entering, and Flipkart it is already a large network in India. So if that large network companies will enter in other market, they will focus on. Here the investment banker plays a crucial role in the mergers and acquisitions. So the investment banking companies help the company from end to end process, like finding the right company to acquire or merger, and they will go for help the by giving the prospectus data. And these IB companies can also help in valuation of target company, negotiation to get the shares at best price. They will also help regulatory familiar formalities, whatever the formalities is required, that is different papers or documents need to be provided to SEBI, that prospectus guidelines will be provided. And here the company mergers and acquisition, they will also go for spin-off or demerger. Spin-off or demerger means if a company creates any separate company from the one business division, it is demerger or spin-off. So if you have in one building, whole company is running. So in ground floor they are divided. This is uh, one division, and next is one division. They are dividing means this is demerger or spin-off. Same company will have two or more separate companies in the market. If we go for that Reliance company, it has Geo company, petrol business, retail business, telecom business. So this have different separate companies will have. Why? The reason will be com combined entity market capitalization or value can be less in the market, since valuation of business or share price is difficult if they have more business. So if you go with the group, one company is more profitable and one company is less profitable. One company due to some problems now less. So if you go for the group level, it will show less impact. If you individually see one or two companies in high position, so that they will use this spin off. And so the if they see separate business in each company, it is easy to predict the growth and value of the business. So demerger can help in that increase the market cap of these group companies and investors' wealth can increase. Operations related to efficiency can increase for companies if all employees are different divisions are mixed and their expertise will be in one sector may not develop, so they may not become best compared to their competitors. So if they have separate divisions, they will recruit separate person. It can create environment for them to concentrate on certain areas only, and it will increase the efficiency of the operations. That is the case, and sometimes the company will go for the delisting. Delisting means it, from delisting we have started with IPO, or we can go for the direct listing. If company don't want to in NSE regulations following this, it will go for the delisting. For delisting, it has two options. One is compulsory delisting, another one is voluntary delisting. So compulsory delisting means the stock exchange remove the companies since they have not followed any listing agreements or terms and conditions. Or if you voluntary delisting means if company is not getting any benefits of listing the shares in the stock exchange, they may how they do not have popularity, brand image, they do not getting any more liquidity. It is not increasing its shareholders wealth, they can decide to delist the shares, so they can do that. It is can come out from listing, and it cannot need to pay any listing fees after the delisting. And the company want to change the name, if the company is changing the name, and then the it will impact the investors, so they want delist this company, and then after from new name and new company it will want to list, and it will go for a reverse stock split or stock consolidation. That is, small companies will buy the big companies, and these companies may use the shift codes to process these corporate actions. If the shift was standard for society for worldwide interbank financial telecommunication, so these systems are network used to make bank transfers. Shift means that is used for banks to transfer sending money from one bank account to another bank account. If we see within India, we can use the IFSC code, but if you or for other countries, it will require a shift code. It is same like as IFSC code within country we are using. This shift code will be used when the company is sending any money from his bank account to another bank account, so it will process the more secure and chances of fraud will be less when the shift code was maintaining. Then the same system is also used for processing corporate actions, so that data can be more accurate and timely updation of corporate actions can be done. So by these asset management companies or brokers etc., in their system they will get this corporate actions notification, corporate action instructions, corporate action confirmation, corporate action status, and processing advices. So these all are will get these asset management companies or stockbrokers. There are some forms will be there, that is MT564, MT565, MT566, MT567. In MT564 means it is a corporate action notification which company is giving, and MT565 means it is corporate action instructions will be existing MT565, whereas MT566 means CA corporate actions confirmations, and in MT567 the corporate action status and processing advice will be there. This is the case, and we will continue in the next class remaining.